That doesn't make any. I mean,
No, let me do anything. I don't know. What happens if we can't do this? I don't know the rules.
there are a lot of people that usually watch it remote.
No. But by law, we're supposed to.
Gotcha. See, that's one good thing that maybe you're going to.
Team was get the invitation, the calendar.
That's not the problem. It's the streaming that's the problem.
Sorry, Tom, this is not really, nothing's working today. Let me just click it. Looks like it's on there. Yeah, it's live. Here, I'll check my issue. I'll just, what's the name of the thing? How do I get set to one? Did I get rid of the meeting? Yeah, okay, I think definitely not to let this sound big now. I think you're good. So it's on. We did it. We did it. It's on. Okay. Like to know the fines. But yeah, that's it. And the camera's working. Is the microphone on? Okay. Yeah, that's all. No, I didn't swear since we were first. Okay, sorry.
AI will delete that message.
What?
AI will delete that, don't worry.
Okay. Well, my computer wouldn't work, like not this whole process. The computer just wouldn't work. That deleted. Yeah. Don't mind the. I don't know why it's not that way, but let's just say that Courtney makes everything prettier. And I want to talk about it.
Old diddle machine. It means like.
Just stop.
Let's see what you can do.
There doesn't need to be any comment. Courtney could have waited one more week.
Right.
If Courtney has
The amount.
Experience.
Last two.
At least cybersecurity, so. Glad you can do this, but not as we can listen.
All right, Mark, whenever you're ready.
Okay.
Are we waiting for Elizabeth?
No, is this the month she said she couldn't be here?
Who's that?
Elizabeth?
I think so, yes. That's-
She had a conference at one of the months, and then next month is you, Jen, right?
Yep.
All right, go ahead.
Okay, I'd like to call this meeting of the Audit and Finance Committee to order at 1:10 PM. I'll take the roll call. We have Legislator Tim Myers.
Sure.
Supervisor Jason King.
Here.
John Spears.
Here.
Elizabeth Frias has an excused absence. We have a quorum. I'd also like to note that Thomas Baines is sitting in on this meeting as well. First, I would like to see if everyone has had a chance to review the minutes from the August 20th meeting. And if so, if there are any corrections, may I have a motion to approve?
Okay.
By Legislator Myers, seconded by Supervisor Keding. All in favor?
Aye.
The minutes are approved. So the next item on our agenda is to go through the monthly financials and investments.
Well, the finances are in front of you. One big thing to note, this month, we did the transition from AccuFund, which is our original accounting software, to our new accounting software, which is Zoho Books. We did that, just to recall, we did that because we're using Zoho as our CRM. It came with Zoho Books. We liked the platform better after researching that. And so really Courtney went in and did a tremendous amount of work of individually inputting our whole 2024 invoice, which was a lot. And anyway, since that was done, we started the new software at the end of August. Things are going well. There is a possibility, and we'll amend it next time. With the transition, sometimes there's, some things that don't transfer correctly or aren't looking right. And if the accountants are reviewing all of that now, they don't think they'll have to change anything, but there were a couple questions, but we think we found out. We had a fraud, counterfeit check that was written, which the bank caught, and that was a reversal. So a couple things came up. But I think we should be concerned that it happens, I guess, every day. So there's some other processes that we can go through. It takes an extra step where it's like kind of like a consolidation where you're putting everything in for the end of the day and then approving it. I don't know. We have to look at that. We're going to go over it with the bankers. We don't have to. It's included in what we pay for our banking. We're going to look into that. It is our first time that's happened. As far as the investments, we've had quite a bit of activity. We had a couple investments that came due in the beginning of September. It was around 3.5 million total, I believe, and we moved 500,000 of that over to the bank. And then we have another one coming up about 2.1 million in the beginning of October. We will be now withdrawing money probably more on a regular basis, but Brett and myself, and Mark and Thomas are on these emails as well, kind of go back and forth. We look at what we know is coming due. We look at the expecting make ready costs, and we make the decision. Our goal is to really keep as much of that obviously as possible into the investments. And we've been able to do that. We had one month where I think we came down to 30,000 in the bank, which is good. We didn't go over obviously, but it was a good calculation on our part. We maximized the amount of investment that we could have. And that's kind of where we want to go going forward now that, we'll be spending quite a bit of money every month and just kind of balancing that. Other than that, besides the fact that we're just spending a lot of money, there's not much to update. It's good. That means we're building, we're moving forward. Our make ready is progressing with the exception, which you'll hear in the board meeting. National Grid is still crawling. But the NYSEG towns, I think Boston's a NYSEG.
Yep.
Are progressing nicely, and we'll talk more about that. Any questions on that piece? So as you recall, Mark, you want me to move into the budget part? So as you recall, last month we had a presentation to this committee on not only the 5-year plan, but also the 2025 budget. So if you recall, the timeline that we're kind of going off of is, we're going to be presenting to the larger board, the budget this year, as well as the 5-year plan. So you'll have to sit through a little bit of that again. We made some adjustments on the budget, just tightening up the numbers, and Fred can go over that. But you have it in front of you, not too much. You didn't ask for that much. There were some mistakes. Thomas had emailed out a couple things. So we've cleaned that up. But this is basically the budget as it stands for now. We want you kind of review it during this meeting. We can talk a little bit about it as well. And then that's what will be presented to the first time to the board of directors for their review. They'll have that meeting, you know, if they think of things between this meeting and next meeting, to get back to us, same with you. And then we'll meet this committee again before the October meeting, and then the final budget will be presented to the board of directors. And as long as, well, it really has to be finalized at that point. This board or this committee will make a recommendation to the board of directors for approval. That'll be approved at the October meeting by the board of directors. And then by October 31st, we'll submit it into the ABO budget. Okay. Any questions so far?
No, I'll say one thing just before we get into the actual like budget part is I did notice some, I don't want to say irregularities, that's an odd word to say, but some areas where I had like little persnickety questions.
Yeah,
maybe.
Perfect. Yeah.
Just to confirm that we're talking about the same things and sort of how the ABO, you know, requires everything to be categorized. So
Yeah.
First, I just want to confirm.
I didn't print out the ABO piece.
Okay.
This is our actual budget. The ABO, I can bring it up for you, Mark, if that, I thought we would do that on us.
Well, yeah.
And then give it to you in October.
Your actual,
Because this is what
it's
goes into
built
the ABO.
inside, yeah, and you just condense it. So like the subtotals are all exactly the same. So the couple things that I at least noticed initially is for the 2023 actuals, those should basically match the audited financials exactly, and they don't. There are little variations. I don't think that's necessarily a big deal. The other thing is, in doing this review, I realized that the only audited financials I have are the draft ones.
Oh, really?
So it's possible that there was a change, so I want to get an email copy of the final. But at the end of the day, like, so when we have the reconciliations and everything, like all of that should be appreciated within. We have, so one simple thing, for instance, is for 2023 actuals, the non-operating revenue should not be $860,809. It should be $860,579, because there should be $230 of operating revenues, which is sort of, you know, based on the financials. Little percent. The dollar figures are basically the same. It's just a few things are kind of in different columns.
Well, we use the bank, right?
Yeah.
Versus the actual final.
Now, I couldn't tell you what that $230.
It's on the audited financial statements. It's
Yeah.
$230 of other operating revenue. Yeah,
Uh-huh.
I didn't know what it was. I
I
lumped it
see.
together with that. So-
Yeah, little
You can do that.
things, and there
Perfect. Okay.
just a few other adjustments that were for reconciliations. I think I was trying to do them at, I think that adds everything up correctly. I just wanted to confirm for the 2024 budget, it says 2024 adopted. This column is the estimated or adjusted budget. It isn't actually the adopted, correct?
For
Okay,
24?
Yes, because if it's the adopted, then it should match the actual adopted budget.
From last year.
Yeah.
Per the, at least what you submit in ADO for the current year, it qualifies it as an estimated, which is an adjusted budget. So I just wanted to make sure that the column header was potentially wrong here. And
That probably is.
okay, again, little small persnickety sort of things.
That column's the actual plus estimate.
Okay.
For the rest.
And then the other was we don't need to go out to 2029. It's great that we did. But for at least for the for ABO purposes. It's just the prior year actuals, the current year estimated, the one future year proposed, and then 3 subsequent years.
We may have done that for the 5-year plan.
Okay, is that? Okay.
But in the ABO, we'll only go to 28.
Got it. Yes, it should only go to 20. Then the last one that I noticed, and this is one I almost feel like we want to just confirm with Drescher Malaki or Lumsden, is when we reconsidered or rather further clarified the American Rescue Plan dollars as being revenue loss
We did
dollars.
it,
Those are no longer being considered a federal subsidy. They're being considered a municipal subsidy,
okay,
because now it's basically county dollars going to ErieNet, not federal dollars being passed through the county to ErieNet. So we just want to make sure
we have
that.
to move it down the line.
Yeah, and the only actual question I have probably that may need to go to Lumsden or Drescher Malaki is related to the past. So for the 2023 actuals, I can't recall offhand. I'm assuming we did, but I can't recall. Is that if we modified our 2023 financial
We
to
did.
amend that? Okay. So that was going to be the other 2 columns, obviously, for the current year.
You
And
mean after the ARPA decision?
yes,
We modified our, yeah.
I'm pretty sure we did.
We had to resubmit.
Okay.
Yeah, to the ABO.
That's what I thought, but again, all I
Yeah.
had in front of me was this older draft, so I couldn't remember the snapshot in time.
Yeah, Dr. Monty prepared that for us and we resubmitted to the ABO.
Okay, so then we would probably, so all of this, I mean, it's still in the same category as grant income. It just
Yeah.
needs to move from federal subsidy to municipal subsidy. Okay, those were my,
Those are good.
past tense
Yeah, no,
sort of,
that's what we're looking for.
Yep.
That's what we need. Because we've looked at this a million times, so it looks fine in our eyes.
sorry, the only other thing, so in also the spreadsheet that was sent out, there were 2 tabs. There was the detail tab,
Mhm.
and then there was one that was more the ABO. I just want to make sure that the ABO one is a work in progress. correct?
It is.
Okay,
Yeah.
okay, because there was a lot of missing information. I want to make sure that was
So
work
what,
in progress and not in error.
yeah, so, once you guys are good with the detailed budget,
Okay,
we need to meet again. And I know Andy and Fred did a meeting because Andy kind of helped last, helped last with the ABO. We'll bring you on into a meeting and that will be detailed, but it all comes from the detail
Mhm.
anyway. So I figure why bore everybody with the ABO stuff.
Yeah, and I think that,
So this is finalized between this time and next month, Mark. We'll jump on a call and make sure those numbers are.
yeah, and to be honest, I mean, I think there probably is no issue with approving the detail because the detail is organized and then subtotaled exactly into the ABO. I don't think there needs to be any sort of separate conversation, discussion. It's just one is a different format.
Right, yeah, exactly.
Okay,
Yeah.
I just want to make sure because there was that second tab and it looked like it was a draft tab, but it didn't inherently. say
Everything's a
tab.
draft tab at this point, but then, yes, since it's all the numbers that they approve anyway, this board and the board of directors, the ABO is just internal for us to make sure it's correct. It's a separate resolution, but we'll have that complete for the board of directors and for this group next time.
Do you happen to remember what that $230 was? I mean, I'm pretty sure it's gonna go into just miscellaneous
It's
income.
something from the bank, it's like an interest earned, or there
Okay.
was that the one that carried over from?
It's gonna be in the other operating revenues. I just don't know which of the categories, because.
Didn't we have that last year too?
Well, that was interest earnings. That was the $932.
Right, I think
For
that might be the
the,
same.
3 days or whatever that you got to invest that.
That was for 20, yeah.
Yeah, for
That was
22.
22.
Yeah,
It
that
must be the
8%,
interest earnings again
it may have, yeah.
on, What I'm thinking it is we have that separate, we have some money in a separate account, remember? It might be the interest earned on that. I gotta go back and look again.
Yeah, it's just that's showing as a operating revenue, so it's not gonna be interest earnings because that's a non-operating revenue.
I don't know what it is. We'll find out.
But anyways, again, those are very, very minor things. So with that, then we can get into the actual meat and potatoes. That's the actual budget. So I guess the question that I would have, the generalized one, is you had indicated that you've tightened some numbers looking forward, a little overview on what has tightened and based on what information.
So I would say the major change you'll see in this version versus what we had last time was you'll see an increase in the NICEAG non-billable reimbursement line. I think in total before that was around 5 million.
Okay, so
And that's increased, and I have what's on here is a little over 10 million. And that you'll also hear about that, I believe, in part of the board meeting. Is that make ready is running a lot higher than we anticipated. Luckily, it's not billable. So we'll get that money back. And so related to that, you will see an increase in the capital in process.
okay.
To just kind of account for that.
Okay, and the figure you gave is the subtotal of 24, 25, and 26. Okay.
Other than that, the expense to operating expenses shouldn't change much at all.
Yeah.
That was the major change that we showed.
I guess it's not hard, but there are a few
There's some minor changes, just that, for example, one example that comes to mind is from the last time, we had put the rent at, I don't know, 17,000, but the years going forward it's at 31,000 still. We adjusted that. That was just an error that we didn't see, that was adjusted. To bring it down to, I think we did a 3% increase each year from the 17,000. Trying to think, there were little errors here and there. We had another number come in that we adjusted, but nothing major other than the make ready. It's been kind of back and forth.
And then I'm just assuming that obviously the surpluses that we showed for 23 and then you're anticipating here for 24, all of that funding has been rolled back into 25, 26, 27, correct? Or as part of this?
Yeah.
Okay. So, okay. So I guess then for 2025, clearly that is, right now our expectation, and this has shrunk a bit, is the expectation of a gap. Has there been any further conversation on the potential gap closers for that? Obviously, that isn't a gap on day one. That is a gap by, the end of the year, and you really thought that was, a little bit fluid even, that it could be anywhere between the fourth quarter 25, maybe even pushed back into 26. So I'm wondering where that conversation stands on, our ability to close that gap.
I don't think much has changed since August. Make ready is the largest category that trying to manage as best we can, but the utilities and PSC are modifying the rules as we go. And so we're still hopeful that we can claw back some of the projected make-ready expenses, but we haven't realized those yet. It's premature to declare success on that. But in general, if anything, I think my revenue projections for 25 look slightly better a month later than maybe last month. We have some good accounts ready to go once the fiber is built.
Mhm.
And so we will see some revenue late in 25, Q3, Q4, with more coming in 26. So that should help with the gap, because I think Fred was more conservative, and we haven't changed your revenue projections yet. Again, until we realize these things, we don't want to overstate it. So, and then the third category, we identified maybe, I think it was 23 miles
Mhm.
of fiber that I guess I would classify it as non-essential. It's good infrastructure to have. It closes off some lesser rings, but we could still accomplish the redundancy with larger rings. And so I'm not saying we're going to delete those 23 miles, but they're back burner right now.
Mhm.
We're not going to commit to those miles till we have a better handle on where we are with operating revenue later in the year. So
To
add,
do a little, well, oh, sorry. Go ahead.
so you add those three, the revenue projections, make ready cost control, and potential mileage reduction. We've identified about 8.5.
Okay. So I guess then my next question is, and this may be a little bit of not fully know, I mean, with ErieNet, the organization is a little different than like a municipality, let's say. I know that I can't adopt an unbalanced budget. So is the plan for this 2025 budget proposal to close this gap to zero? Or are we planning to just pass an unbalanced budget? I guess the side question to that is, when we show a 2026 proposed gap, is that gap 1 million after closing the 25 gap, or is it a combined gap of 4 million?
Yeah.
So we actually have
I mean, we have-
gap reduction in 26, so the gap shrank from 3 to 1 million, or 2.9 to 1.1.
Okay, so it
It's
is
not-
appreciated into the next year?
Right.
That was my question is,
So that isn't a question that I brought
Or is it-
to.
It's standalone. It'd be 4 million, but you also have 3 million of surplus in the 23, 24 year.
okay,
So if you mean, you add those together, so.
and that's what I'm assuming here, so it's almost like you're planning to use, well, at least the 23, but the 24 isn't yet, but you're planning to use, appropriate fund balance essentially, to close that gap, okay.
So that's a question that I have that I wanted to bring to the group. And do we want, we can increase and plug that to a zero balance.
I
We
mean,
can do that based off of some of these solutions. We can take those numbers and put in these 3 areas. We could even take the 23 miles, just that. But my question is, do we want to do that? I've never, I agree with you, from a municipality standpoint, I've never had
but we're not allowed to.
so, we just raise the taxes and that equals that out. Right?
Well, I mean, property
so-
tax is the balance.
Right. So, or you use your fund balance.
Yeah.
Or a combination of both.
I mean, ideally, I think 25 should be shown as balanced.
I agree.
And then with a utilization of whatever the gap closer is, and whether that means, I mean, at the end of the day, the vast majority of what we're doing right now is funded by ARPA dollars that are already in hand. So ARPA is your balancer,
Mhm.
you know, so to speak.
And that's where.
And
it
that
comes
just essentially pushes, you know, the gaps further out.
Yeah.
I don't think there's any problem with, you know, that zero, and when we zero it out, you know, having an asterisk here for our, you know, knowledge and the board's knowledge saying, we had to use the following gap closers to get this balance, but like we're at the end of the year, if we have in fact a gap, which means we had more expenses than revenues, we can't just not pay whomever we owe money to, right? We have to pay it.
Right.
So we're gonna have to take that from somewhere.
Right.
We should anticipate taking it from somewhere, and then if things go better than anticipated, we don't take as much. It's no different, you know, if I'm using appropriated fund balance and I plug in a number in my budget, I don't actually draw that appropriated fund balance until my, you know, I close the year. And many times, at least for the county budget, we've called for utilizing, you know, 5-10 millions of appropriated fund balance. And we've ended up using zero because sales taxes come in big or
Right,
something
yeah.
like that.
Same.
But I still think we need to be to zero.
So we could do that, I mean, very easily, and I think I want the board to see that this is the potential, right? But the 3 areas of which we have solutions already identified is probably where we'll fill that gap. And more importantly, I feel very good about that, maybe even all coming from Make Ready, given the discussions that we've already been having with National Grid and the potential that we're not going to be paying all of that versus getting reversed or them replacing their holes. But it might be where we take a combination of a couple different things, and next month we can note to you then where that 2.9 gap was filled in. Or if you have, or we can send it out earlier, but that was my biggest question.
Yeah, I mean, the expectations here are, we, you know, had the about 861,000, you know, surplus, if you will, for 23. There's an expectation of about 2.1 of it. That in and of itself basically closes the gap. Yeah, and I think just inherently, I think we need to show for the current year it's a zero, but I also appreciate like going into this sort of, you know, work session-y sort of meeting. You want to know what your gap is and then start closing from there. I'm doing the same thing right now. Actually, my gap is about the same. I'm trying to close.
So you're not offering to give up that 2.9?
Oh, no, I don't have.
Oh, that was option 4.
I thought I heard an unanticipated revenue from Mark.
Yeah.
Where sales tax is not going great.
It's not.
No,
Oh, sales tax is not good.
it's
See, I don't even know these things anymore. I used to know that.
the only good news that I really have about sales tax is that the sort of bottoming out of it started exactly now last year.
Yeah,
So we have nowhere to go but up.
okay.
Said just.
Well, because it's all in
Spending less.
we get a lot of just snippets of anecdotal evidence that doesn't really come together in a large picture. I think the most important thing is I think Dan Castle needs to buy a couple more trucks.
Sure.
So
There you go.
we just bought one, so
Yeah.
we got another like what, $2-3 grand and.
Well, he's not saying that, he's not paying a highway tax now.
And,
Just saying.
yeah, so like the remainder of the year, like for instance, at this point, last year, sales tax had grown 4.6% from that point in the year.
Okay.
From then exactly now to the end of the year, it was negative 0.5%. So it actually reduced from 2022.
Yeah.
So proportionally speaking, this year, the first half of the year, because of so much growth in 23, 24, you know, it's understandable that we're underperforming
Yeah.
how great 23 was. now I'm hoping we're gonna overperform how bad 23 was at the same point. But yeah, it's,
Sorry.
Should I be worried?
well, you don't get sales tax.
No, yeah.
No, you shouldn't be. No,
Oh, no,
no, you're fine.
there's,
The distribution.
No, everybody who has been, overestimating sales tax should be, especially, you know, the smaller
We
the
always went way
municipality, the
under.
larger proportion of their budget it is. Be a killer.
I can't imagine that people, I know they do.
I think a very conservative.
Oh, so did we. And
Honestly,
it was like awesome, especially 2020, because they said, oh, no one's gonna buy anything, and then it came in so good. We were rolling in the dough.
Next year, Treasurer Millett did a really nice presentation at the supervisor roundtable, and I was a moderator for that. But there's actually a potential cross looking, forecasting into the next year that sales tax is going to drop, expenditures are going to go up. So get ready for a bit of
Well, and yeah, it's all,
conversation on the horizon going into next year.
it's not necessarily going forward that we're gonna get less sales tax in, it's just percentage growth. And the good news is, I mean, that's how proportions work, right?
Right.
Is 1.5% growth of what we got in sales tax 3 years ago. Well, we've had 15% growth over the last 3 years, so that 1.5% is 10 times more money.
Right.
It's certainly leveled out, and there's that little bit of period right now where a lot of municipalities have really tight budgets and we're really, utilizing like the last of their ARPA funding for, to plug budget caps. And then sales taxes kind of not doing great. It's a lot of tough choices. It's starting with the city.
Believe it.
Oh, sorry, that was
That's
a
okay.
sidebar, but,
So yeah, we'll definitely bring that to 0.
okay.
With either a combination of the 3 areas, the surplus, is a
Mhm.
good idea as well.
I like the idea of a footnote to that.
A little footnote.
Yeah, at least that way the board shows, we're showing the board, our committee due diligence that we've identified, we've acknowledged that, and here's what's going on.
I mean, look, the sort of rigidity of what the ABO request doesn't really allow for,
Right.
those other sort of budget lines, but it doesn't mean we can't also have those for our own, auspices. So I like the idea of doing that, but I also still appreciate that, today, we know we have about a $3 million gap, and now we have some, legitimate gap closers, and we can get that to 0 and be aware of, what we did to get there.
So then what about showing we're fine showing the loss in the future years?
Yeah, those are out years. I mean, it's not the greatest thing. You'd rather not have that, but that's a 1 year off or a multi-year off estimate. I mean,
And we've talked to this group, we'll talk to the board of directors, but I mean, we have some good potential. Matt just mentioned some of them, but there's even ones that we're not considering right now that could close some of those gaps as well.
yeah,
We just don't want to put it in there when it's not realized,
and at least the way, for the county, we tend to do that when we do our 4-year plan is if we believe that there's the potential for out-year gaps, we show what those gaps are, and then we have sort of a generalized list of gap closers. I wouldn't say we necessarily assign a dollar figure to those,
Right.
but we say like, look, here are the tools in the toolbox. And, obviously we know that as we get closer, the gaps seem to change, and usually they get smaller, because there are more knowns. But then here are the tools we have to address those gaps.
And
Should
one
they
thing we would add to ours that we didn't even talk about is if we had to, we can go out and bond.
Mhm.
So,
Yeah, so I mean, a reasonable gap closer is, greater than anticipated, revenues for X, Y, Z reason.
Okay.
We equally say things like that, a gap closer is greater than anticipated sales tax revenues, things like that.
Perfect.
Yeah.
all right, anything, any other questions on the budget or anything else, Mark?
minutes or, yeah.
He was interested in finance.
You can go sit
I
outside.
want to listen to you talk.
Anything else, Mark, that you wanted?
No, that was everything in 45 minutes.
Okay. Anything else that the board or the committee wants?
We are 35 minutes. I'm sorry, I had
on the room.
I'm probably gonna need
So
50 minutes,
Yes.
which is that's now
Thank
be over to the new board meeting.
Thank you.
My computer's working fine now. All right, then I think we're all set. So just to wrap everything up, I think what we'll do is, we'll balance this out. We'll send it out to the committee to review before the next board meeting. Because that's where you'll really be looking at the finalized one. And then, just make sure you review that. If you have questions, let us know, call us. We'll get that finalized and then we'll do the recommendation to the board for the October meeting. We'll be done.
Could you attach, well, I had a date here. Could you also attach the final for the financials as well? So that, you know.
Oh, yeah, I have that in there, yeah.
I
The final, that's the revised one, actually.
Yes,
Yeah.
I'm like two minds.
Yeah.
I could probably have it somewhere. I just didn't carry it.
We have it. I don't know if you.
I just didn't put it in, the right folder.
Yeah, no, that's fine. Yeah, I'll attach it. Yeah.
One stop shop, yeah, there you go.
No problem. Anything else? All right, you can adjourn the meeting.
Okay, entertain a motion to adjourn.
Second.
Okay, we have a motion from Legislator Myers and a second from, John Spears. All in favor? Okay, we're adjourned at, 1:46. Yes. I'll bring that.
So then I can